Markets head into Wednesday with geopolitical risk, higher energy prices, and rising Treasury yields continuing to dominate cross asset price action, while investors also keep one eye on central bank expectations and another on global trade developments. In FX, the US dollar remains broadly firm, supported by the move higher in US yields and a resilient higher for longer interest rate narrative. The standout remains dollar yen, which has surged to fresh 40-year highs as the wide policy divergence between the Federal Reserve and Bank of Japan continues to outweigh growing intervention concerns. Japanese officials remain on alert, but so far the market has shown little hesitation in buying dips, given the still significant yield advantage offered by the dollar. Elsewhere, the Canadian dollar has come under pressure after the Trump administration announced new tariffs on a broad range of Canadian imports, although negotiations between Washington and Ottawa remain ongoing ahead of the planned implementation date. Geopolitics remains the dominant macro driver. The United States has now completed an 11th consecutive night of strikes against Iranian military targets, while Iran continues to warn that any attack on its nuclear facilities would trigger a broader regional escalation. Although CENTCOM insists the Strait of Hormuz remains open, official figures continue to suggest oil flows remain well below pre-conflict levels, keeping a meaningful geopolitical risk premium embedded in energy markets. President Trump has also reportedly rejected a proposed 10-day ceasefire, reinforcing concerns that tensions could persist. Equity markets have so far proven remarkably resilient. U.S. stocks rallied strongly into Tuesday's close, despite higher Treasury yields, with the S&P 500, NASDAQ, and Dow all posting solid gains. Looking ahead, markets will continue to monitor developments out of the Middle East, any further headlines on U.S. trade policy, particularly with Canada, and incoming economic data ahead of next week's key inflation and central bank events, with geopolitical developments remaining the primary driver of overall market sentiment. That's all for now.